So you're incorporated, you've got kids, and childcare is one of the bigger items in your household budget. Daycare, nanny, after school care, summer camps, whatever the mix is, it sure adds up fast. One question that comes up all the time: can I just pay for this through my corporation and deduct it? So let's talk about it. On that specific question, it's typically going to be a no, but that's not quite the full story. This is a line item with a big potential tax deduction, so let's cover what you need to know. Here's how CRA looks at this. Childcare gets dealt with on your personal tax return, not as a corporate business expense. The Income Tax Act has a specific section for childcare, Section 63, and that's where it lives. And the deduction itself has specific mechanics. The lower income spouse usually claims it. There are exceptions if your spouse is in school or incapacitated, but for most families, it's whoever earns less. The amount you can deduct is capped by per child limits and by their earned income. And here's a wrinkle: earned income means salary, business income from active work at a personal level. It has nothing to do with whether your PC is making money or has retained earnings. What counts is your spouse's actual earned income. Now, I can imagine what you might be thinking, but I need childcare in order to work. Without childcare, I can't earn income. So it has to be a business expense, right? Now, I don't want you to blindly trust me or any other accountant for that matter. Let's take a look at some precedent to understand the why behind this issue. So, there's a Supreme Court case from 1993, Symes versus Canada. A self employed lawyer in Toronto tried to deduct her childcare costs as a business expense. She argued she had to pay for childcare in order to work, so it was a cost of doing business. The Supreme Court said no. Working in order to earn income doesn't make every cost of living a business expense. By that logic, you'd be deducting your groceries because you need food to live in order to work. So, childcare belongs in the personal tax regime, not in business expense rules. Now, as with any tax rules, there's probably an exception somewhere. And there is, but it's narrow. If your business actually runs a childcare facility on site, it's free or low cost, it's open to all your staff equally, and it's run by the corporation, that can be non taxable. It's intended for big employers running in house childcare programs. Typically, you see this in hospitals, universities, other institutions. They sometimes do this. For a solo PC, the exception almost never fits. A nanny watching your kids at your personal residence does not meet this bar. That is relatively clear. So, what happens if you ignore all this and have your PC pay the nanny anyway? Ultimately, it doesn't save you tax. CRA will generally treat the payment as a taxable benefit to you, typically as an employment benefit reported on your T4. The point is, it's taxed just as your personal income is, like your salary. So, what is the clean way to do this? Pay your caregiver from personal after tax funds. Yes, that means money that's usually, it's already been taxed. In this setup, yeah, there's really no practical way around that. Also, keep receipts. If your caregiver is an individual, those receipts need to include their social insurance number. And then the deduction is claimed on the lower income spouse's personal tax return. That's the most defensible path if you're ever facing an audit. And obviously, this is just general guidance. Talk to your accountant about the best plan for your situation. Now, a couple of things that people often miss. If your nanny is your employee rather than an independent contractor, that's a household employment relationship. You'll need to set up a personal payroll account with CRA. Withhold and remit source deductions and issue them a T4 at the end of the year. It is really not as complicated as it sounds, but it needs to be done if it's really a regular employment relationship. Also, the childcare deduction is capped by the lower income spouse's earned income. In most households I see, there's typically a large income gap between spouses. This means that spousal income splitting strategies become even more important if you have big childcare expenses. And childcare expenses are a deduction, not a tax credit on your personal tax return. The per child limit is $8,000 a year for a child under age 7 and $5,000 if they're 7 to 15. So this can be significant real dollars. If you're spending thousands per year on a nanny or daycare and your spouse has no earned income, then that deduction is effectively wasted. All right, let's wrap up. Generally, you will want to keep childcare expenses out of your PC. It's a personal cost, pay for it personally, claim the deduction personally. And also, it's potentially a large deduction, so talk to your accountant to make sure you get it right. If you have any follow-up questions, let me know in the comments. All the best, and I will talk to you soon.